Nikunj, the finance minister already all set. We've seen her enter North Block and, looking ready to present the budget this time around. While markets, we're just going to see them open in about 2 minutes.
Abha, if I have to only address the market setup and purely the market setup, is that this time around expectations are low. No bad news is good news for the market. Which means if we don't get anything which could be called as an incremental tax to shore up revenues, which may have an impact on ultimate profitability or ultimately in terms of the liquidity, I guess market positioning is such that we could be in for a spike. We could be in for a temporary spike because that is how market positioning is. I always say this, Abha, that focus on the event but also try and figure out that how much of that event is in the price and how much of that event is not in the price. This time around, even though this is the first budget, the first time on a grand forum like this, the NDA 2 would be projecting their economic blueprint for next 5 years, the market expectations are very diluted. So you're approaching this budget with very diluted expectations, and if you're a trader, I guess it makes very little sense to be on the short side. What may disturb the market? Additional taxes. If government is forced to come up with something on inherent tax, if there is some cess which comes up, ultimately if there is going to be an impact on the aggregate EPS because of higher taxation, this will have an impact on earnings, the market mood and the market setup. So nothing new coming on the tax front from a market standpoint is good news. A concrete view on what will happen to disinvestment number, I think is something which markets would look forward to. Something coming on the front of LTCG, markets will start jumping with joy. So I think that is the market setup. So I'm just going to move a bit. Let's look at the pre-open rates here just to establish that where markets are right now, and that's how markets currently are right now. The top 50 gainers in the markets in the pre-open session, Yes Bank is under pressure irrespective of the budget, and UPL and India Bulls Housing Finance have come back with a vengeance in this year. So that's how the market positioning is, that's how the market volatility is. And the first rates will start coming up any second on your screen. It's a big day for the market, and that's how markets have opened. It's a surprise move in Britannia, State Bank of India, Hero MotoCorp and Power Grid. Now that screen will again start reflecting and capturing much more too many gainers and losers. But off the blocks on the budget day is none other than India Bulls Housing, followed by Z, where a deal is almost in the final lap, and Tata Steel, which seems to be making a comeback. We've identified budget super 30 stocks for you. These are the 30 stocks where we feel that expectations and excitement could be very high. So let's look at that aspect. Let's look at that heat map of budget 30. These are the stocks where we feel that the price action really could be very high. Piramal Enterprises, India Bull Housing, the wall is getting slightly lazy for the moment, but there you go, markets open 25 points higher, the budget super 30. Piramal is off to a good start. For the day, I would say look out for 3 stocks. State Bank of India, if anything comes on bank recap or a holding company. L&T, because there would be a grand focus on what will happen to the capex. And third, DLF. If anything comes for the housing sector, DLF purely because of its size and purely because of its sheer presence in the F&O space could see a movement. So if I have to stick my neck out, I would say State Bank of India, DLF, L&T, and then watch out for an agri stock like UPL.
Aside of that, Nikunj, also maybe ITC, there are companies which do have, which give you a broader coverage of consumption, the rural end of the market. So maybe a Unilever, ITC, large staple plays like that. Of course, businesses like ITC go beyond FMCG and staples. Also look out for M&M, because anything that the government, anything that the finance minister says today on how to really cope up with the rural distress is going to have its bearings on M&M, considering a large part of their revenue pie comes in from their tractor sales. Also, we've been talking about as to how water is going to be perhaps a big theme, considering the kind of distress that some of the southern states are facing, the water scarcity, what with the delayed monsoon. So maybe a company like Viatech Wabag, that's going to be another stock which is going to be in focus, although it started off with a meager gain of about 1% odd. 0.5%. Titan, there is expectation that perhaps something is going to come out in gold duty as well. So look out for Titan. Titan on budget day goes under pressure by about almost 0.5%. And yes, the HDFC twins. Anything that's going to come about on banking or finance, that's going to have its bearings on SBI. But of course, the big boys, which have really been a leg of the market as well. But Nikunj, what else are you spotting?
Aisha, I'm just looking at the volatility meter, and again the importance of the volatility meter I think in my book is very high. That just tells you where the market positioning is, and the market volatility is missing. The market volatility this time around is missing. On a day like this, when you know that markets are in for a swing event, the volatility should have been ideally here. Where is the volatility? Right at the bottom of the barrel, nearing 10%, which means there is no large nervousness and there is no large positioning in the market. And sometimes the kind of positioning we are in, it just tells you that if there is no bad news or if there is no new news, we could be in for a flare-up. If you are a day trader, Aisha, I think you may just want to have a slightly contra approach today, purely based on the fact that there is so little volatility that it may not hurt you to really take a call. Well, markets would be, breathing a sigh of relief, assuming that the revenue compulsions have not really forced people to take any kind of change. Okay, there you see, I think Nilesh Shah is ready. Good old Nilesh Shah, I mean, he's a big channel friend. Our viewers, they always look forward to hear his macro views. Yes, Nilesh, good morning. Thank you for joining us. So the D-Day today, come. So the D-Day today, I guess what we are trying to understand here is that today is the first major day in terms of what the economic blueprint of the next 5 years would be. And this is what we are trying to address. GDP has plunged. I can walk it down here. It has plunged. Job creation has plunged. Sentiment has plunged. What can this budget do to fix the obvious problems?
There are two things this budget can do. On the expenditure side, there's not much space because salaries, pension, interest, defense and subsidies are fixed. On the revenue side, raising tax compliance is also difficult. It can't create a miracle overnight. So we have to raise non-tax revenue to fund infrastructure investment without crowding out private investment. How do I raise this money? Either I can raise by debt or I can raise by equity. If I want to raise debt, the domestic debt market is not deep enough to fund government. It will end up crowding out private sector investment. It will end up raising interest rate. So I have to copy what China has done. With $3 trillion reserve in their kitty, China has gone into emerging market bond index, which will bring them hundreds of billions of dollars. We need to create a roadmap in this budget to be part of emerging market bond index, which will bring $7,500 billion capital into India. With that capital, government can build infrastructure, which will revive investment, which will push growth, and at the same time leave space for private sector to carry out investment. If we don't want to pursue debt path, then there is equity path. Out of this budget, we subsidize public sector enterprises, which has incredible talent, incredible assets, but a macroeconomic environment which is not supportive for growth. The decision making is compromised. Give that in the hands of private entrepreneurs and let them contribute to the budget rather than receiving from the budget. So to me, if we pursue the path of emerging market bond index and strategic divestment, next 5 years growth is almost guaranteed.
Okay, let's look at how markets have essentially moved on the budget day and a week and a month after the budget day. While right now we are in a prescriptive mode trying to assess what government should do, but now I'm going to move to the predictive aspect, not the prescriptive aspect with Nilesh. Nilesh, no point in talking about the prescription. It may follow, it may not happen. But this is something which you can predict, right? What has happened to markets on the budget day? The impact of budget over the years only has got diluted so much so that the budget move last time was not even 1%. So I know it's a difficult question to answer, but if I may put a gun to your head and insist, from a market standpoint, what is the importance of this budget today and in the short term?
So from a market point of view, it is always the long-term growth potential created from the budget, which is critical. We have seen this volatility coming down because now with GST Council, budget does not fix rates. Earlier it was a trade to short tobacco stocks, short sin stocks ahead of budget. But now with GST, those things are not possible in the budget. In fact, this budget we are seeing a scenario where the volatility has actually dropped. It hasn't gone up, it has come down. It shows that now budget is for long term, not for short term.
Okay, so I'm just going to draw the graphic here just to establish that, this is how market volatility has been. And over the years, the market volatility, in a sense, has got completely plunged. Now, let's look at our budget heat map, another innovation which we've tried, just to capture that, from a budget standpoint, which are some of the stocks which could be important and which are some of the stocks you should really monitor. So that budget heat map will just come up on your screen. We are not getting into stocks, but what we've done is that we've looked at 30 stocks which are a blend of consumption, utilities, and then cement and infrastructure. Do you think for somebody who's simply got his ears to the ground, water is an area, anything which has got to do with water infra directly or indirectly should be on the radar?
Definitely, the focus of this government seems to be on the water. In Mann Ki Baat, Pradhan Mantri talked about water. We have seen crisis in Chennai and in many parts of the country. So definitely it's time to keep a watch on water related stock. But do remember that in listed space there are very few opportunities.
What do you think right now the market positioning is not very exciting? Volatility is low. And if we don't get any draconian taxes, if markets are convinced that in order to lap up revenue more, they will not be taxing rich Indians more, markets may just get excited and we could be in for a relief rally.
So within market, if you see, large caps are up 10% from the last budget, mid caps are down about 18% and small caps are down about 28%. Outside of budget also, RBI has now started pumping liquidity. They have started cutting rates and they will start focusing on transmission if that reserve gets transferred from RBI to PSU banks. So in that conducive environment, it looks like that small and mid caps have a better chance of bouncing back compared to large cap.
Okay, so I'm going to put one more graphic out, and this is something which we've got from our expert CK, brilliant analysis. The turning point. Now, CK's analysis seems to be indicating that the budget historically has turned out to be a turning point, and that, there you go, Nilesh. It's a brilliant analysis. What CK has done is he's looked at budgets and he's looked at the Nifty. This is where we were in terms of where the market was, right? Post the first budget of NDA 1, second budget actually, but technically the full budget, the mid and small cap stocks got re-rated. We are here now, Nilesh. What are the chances that this time around, July 2019, may turn out to be a turning point for mid and small cap stocks?
I'm quite hopeful about that. One, there is already expectations which are very, very low for small and mid cap. In 2017, small caps were up 50%. So for the Jan 18 budget, there was very high valuation. Thank you for July 2019, where valuations are down, expectations are low. More importantly, the ecosystem is turning conducive for small and mid cap. Their divergence with large and super large companies is at one of the highest level. Valuations are low, liquidity is improving, rates are being cut, transmission can improve. Put all these things together, I think small and mid cap is the place to be in right now.
Okay, I'm going to circle this part once again. That's what analysis seems to be indicating, that budget has turned out to be turning point. And July 2019, are we in for a repeat of what we've seen earlier this year? I think that is what we should be looking forward to. So, Nilesh, we won't let you escape right now. We've just done the big picture analysis. We'll request you to move to our studio. But by the time both of us walk to our studio, I'll give it back to the ladies, because Purinju is also standing by.
Purinju is, and Purinju just